Hello, everyone, and thanks for joining us for this investor presentation on the Berkeley, a gorgeous B-plus class, 136-unit multifamily asset. My name is Ismail Ray Reyes, and I am one of the partners on this fantastic investment opportunity. You all should have the PDF version of this presentation, but if you don't, reach out to one of the team members, and we'll give you that information on the back end of this presentation, and we'll provide it to you right away. So that way, you can take this and you can, with the recording and everything else, you can really dig deep into this. And so, yeah, looking forward to kicking this off. I am excited about this opportunity. So we're going to provide an executive summary of the opportunity, and then we're going to introduce the team, discuss the details of the opportunity, and explain the investment timeline. We'll finalize by explaining how you can invest in this opportunity. It is fantastic. But first, I do want to take a minute to provide this disclaimer. I'm not going to read the entire thing, but as it states at the very top, all investments have risks. So we just have to keep that in mind. And this opportunity is only for accredited investors. So I'll just pause for a second. But again, you should have a hard copy of this, or at least a digital version you can read through at your leisure. Before introductions, I wanted to provide an executive summary of this opportunity. We will convert what was a dated 136-unit student housing asset into a B-plus market rent multifamily community that will cater to young professionals desiring to live near Florida State University and the state capital where they work, but also they desire to have some separation from the underclass student body. This is a highly underserved and growing tenant base, as many students graduate from FSU in Florida, A&M University, among other universities in the area, but would like to continue to live in the area. The renovations of all 136 units will be completed by February 2022, and we expect that this property is going to be leased to 90%, or what we call stabilized, by July of 2022. We then plan to sell the asset in 5 years after we maximize the tax savings, but we could accelerate the sale to as early as 3 years given favorable market conditions. Your projected returns on this investment are a tremendous 15% cash on cash on average and 20.5 total return. To achieve those type of returns, you need two key elements. One, you need an asset with tremendous upside, which this property, and we'll demonstrate that to you. And two, a great partnership team. And in that vein, I'd like to turn it over to Russell Nova, a highly accomplished multifamily investor and operator who will introduce some key members of the team.
All right, thank you. I appreciate it very much. Before I get into that, I'd like to just come back to the executive summary and just add a few more things. For example, this property has been owned and managed by Stratford Management out of Boston. This ownership is very well known for their exterior work. They currently have put in over $2 million into the property, into the exterior portion of the property. Ideally, this property is located 2 miles away from the Capitol, which holds about 56,000 lobbyists and senators. It is known as the Capital City. This property is a Class B property, which effectively what is going to be as we take over the property itself. This is a resort style living, and that is what we're trying to do by transitioning from student over to market. So my name is Russell Nova. I am the managing partner at Stone Street Multifamily Group. We purchase properties of all types, such as cash flow and value add. I've been investing in multifamily for the last 5 years. I currently own and operate 1,500 units under management, and I range from state to state, such as Florida, Texas, North Carolina, Georgia. I own 575 doors on the KP and about 974 doors on the LP side. I'd like to introduce to you Charles Taylor, who's the principal of Byrne Capital Group. Charles has worked in the multifamily space since 2005. He currently owns and operates 94 units between two multifamily properties. He is a resident of Gainesville, so he lives and operates in Gainesville and has boots on the ground. I'd like to introduce to you Joe DeZelitz. He is the president of Damascus Partners Family Office and Philanthropist Fund. Over the last 18 years, a highly disciplined approach to acquiring and managing assets, which range over 3,075. He has been currently a GP and also a partner of mine on a few other properties that we have purchased. I'd like to introduce to you John Bennett out of Windcrest Investments. Windcrest Investments is a privately held investment development firm focusing on cash flow commercial real estate opportunities and selective development opportunities. Windcrest has been involved in over 2,000 units, which range over $60 million. And in the last 6 years, John has been involved in over $750 million worth of deals. Effectively, our group here owns and operates close to about $1 billion worth of real estate together. And our approach is very simple. We come in from a value add perspective, from a cash flow perspective, lease up, rent, and then sell the property for profit. I'd like to introduce to you ResProp, which is our property management company for this property itself. So ResProp Management is headquartered in Austin with offices in Jacksonville, Tampa, and Orlando. ResProp has over 4,000 units that they currently own and operate and counting. And ResProp also has a very, very strong construction management component. We're owner operators, and we chose to have ResProp as our property management firm over other property management firms because of the construction component. There will be an in-house construction manager on site while the renovation process is going on. ResProp also invests heavy into technology, which is something that is crucially important in today's age. We believe that ResProp is a strong management company, and they will be working with us on the lease-up stage, along with working on the sale for us as well.
I had the great opportunity of knowing several of these gentlemen and was brought this potential opportunity to me and the rest of my partnership team. Essentially, we are a general partner in this deal. We're joint venturing together to really help the sponsors, get this product out. But more importantly, I saw the advantage and the tremendous opportunity more than anything else that I could bring to my investors, and several of my partners felt the same way. So I'm excited to be part of this team, and I just want to do a little bit more on just myself and then the rest of the team here, just to give you guys a little bit more familiarity. I've been actively investing in residential real estate since 2005, and I got a portfolio of about 600 units, roughly 200 of those under management. And they're valued at about 47 million. I also authored a book focused on how to passively invest in multifamily and host a multifamily investor group in Central Florida, where we focus on investing in Florida and also teaming up with other individuals in that area that may want to invest elsewhere. Winston, one of my partners, has a wealth of experience in multifamily as a managing member of Georgiou Group. He has a portfolio of over 500 units, valued at over 31 million, and has an extensive corporate background with over 20 years of experience. Tim Little is a strategic communications and change management expert and was the head of multifamily communications at the Housing and Urban Development. He has an MBA and an MA in global trade, so double whammy there. He also is a combat veteran. Thanks for your service, Tim, with over 25 years of service. He recently launched Zana Investments and has partnered on 59 units valued at 5.7 million, and has investments throughout Florida. Alfredo Hooker is the managing member at DCH Properties. He has a portfolio of partnering in over 600 units valued at over $45 million. He's also a supply chain professional with over 35 years of experience in the computer hardware and medical diagnostic industry. He has a bachelor's degree in economics and an MBA. And last but definitely not least, Carla Kennard of Trusted Resources Unlimited She brings a significant amount of corporate management experience and has partnered on a dozen large-scale multifamily syndications and syndication opportunities. She has an MBA from the University of Texas and has significant experience in consulting, marketing, and sales management within multiple Fortune 100 and 200 companies. So again, just like Russell's team, just a lot of experience here, and we can't be more excited about joint venturing on this opportunity and really being part of this deal. So what I want to do is I want to transition now to the actual deal itself, go over a few of the additional highlights of this opportunity. I want to highlight several things. Obviously, there's more on this slide, but I think the key ones to note are that we are planning to refinance from a bridge loan to an agency loan in year 3. And what that does is that it will return roughly 40% of investor capital back, which is nice, because essentially, you know, all that money you get back, you still have that equity position. So it's still a significant amount that comes back to in year 3. And the other thing is, and this is based on conservative underwritings, but the other thing is if we do go after that refinance and hold for 5 years like we project, we should be able to double investor capital in those 5 years. And on top of that, and this is not actually part of the calculation of the returns, through what's called a cost segregation study, we will accelerate your depreciation significantly. We'll go over that in detail in the following slides. I guess when you talk about numbers, sometimes, it doesn't really do justice. And they say that pictures are worth 1,000 words. I got to think that video is even more than that. So I just want to start off, before I hand off to one of my partners to go into some of the details, and just give you guys an overview of this property. And it's absolutely gorgeous. And so hopefully that gave you just a brief look of why we feel the way we do about this property and being able to bring this opportunity to our investors. So now what I want to do is I want to turn it over to Tim Little, who is actually going to go into start digging into the details on some additional highlights, and also really talking more specifically about the location in the area.
Hello, everyone. Tim Little here. All right. So if that investment summary and drone video didn't get you excited about this investment opportunity, then let's get into some of the other reasons me and my partners like this property so much, and why we believe that Tallahassee is poised to not only maintain its current growth, but surpass it. Now, we all know there's a shortage of rental units across the US, and Tallahassee is no exception. While apartments tend to cater to students in the area, given the huge student population, this has left a gap for those small families and young professionals in the area to find larger, well-priced apartment units with higher end finishes and amenities. With the Berkeley, we intend to fill that gap. That starts with a complete overhaul of the landscaping, which, as you heard, has already been completed by the seller. It now has a beautiful Southwest style vibe that is both low maintenance and low water consumption, making it great for the environment and the bottom line. We will also be putting almost $4 million into the interiors and common areas, improving the look and amenities for residents and achieving top dollars on rents. Next slide, please. Now let's talk about some of the demand drivers. Having spent some of my most formative years in Tallahassee going to Florida State for undergrad, I can tell you it was a lot of fun, but probably not a place that I would have chosen to stay and raise a family. Well, the Tallahassee of today is much different than when I was there as a student. As the state capital, obviously, government continues to be a major economic driver for the area, as does education with the multiple universities. But lesser known claims to fame, like being the home to the world's strongest magnet and Leon County's Innovation Park, have helped Tallahassee advance research in manufacturing segments. It is also ideal from a multifamily investment perspective, with lower cost of living and doing business, an extremely educated workforce, strong population growth, and rising rents and decreasing vacancy. If these trends continue, and we think they will, it supports an even better scenario than what we forecasted in our conservative underwriting. Now let's take a look at some of the projects Tallahassee is pursuing to promote economic development. Of course, we can't talk about employment and economic drivers without talking about Amazon. They have already received approval to build a 630,000 square foot fulfillment facility that will bring over 2,000 construction jobs during build out and over 1,000 new permanent jobs to the fulfillment center when it's complete in late 2022. In addition to attracting employers to the area, Tallahassee is actively investing in their infrastructure to prepare for future growth. The Market District Park project will improve water quality, pedestrian and vehicular safety, and create more green space in the Market District, making it more attractive to families and young professionals. Now, the Berkeley is ideally located. It's less than 5 minutes from Florida State. It's only about 10 minutes from downtown and only 15 minutes from that Amazon facility that we were just talking about. That makes it a short commute to 3 of the largest employers in Tallahassee. And while the property is far enough removed from Florida State and other universities with a ton of trees around the area to make it still feel residential, it is still close enough to restaurants, grocery stores, and perhaps most importantly, Target, to still be convenient. Next, I'm going to pass it to Carla, who will dive a little bit deeper into the market analysis on what makes this such a great deal. Carla?
Thank you, Tim. That was a great area and area overview. He's really anchored you guys in perspective about the area. Let's drill down a little bit closer in. As you can see from a market analysis standpoint, it's almost a 50-50 split between renters and owner-occupied housing, but skewing a little bit higher towards renters. We know there's demand for workforce housing, and we are set to fill that gap nicely. So what do most people look for when they're searching for a new place to live, be it students, young families, or young professionals? They're looking for affordable housing that hits the sweet spot of their needs. The predominant rent ranges in that area range from $1,000 to $1,500. Well, that's the central factor. Most of the rents are above $1,000 a month. And so that lends itself to an average rent of $1,368. We have seen a tremendous uptick year over year in average rent prices. So that bodes well as well. 7% year over year since last year. Average apartment sizes at a comfortable 1,043 square feet. So how does that compare to the Berkeley? Well, the pre-renovation rents have been historically below market. So we're going in, converting student to market housing, bringing the rents up by $100 bump up to market level, and we are offering brand new construction. Such an appealing aspect of this particular property. And the average size, again, is on par with the market as well, very comfortably set. How do the neighborhoods in proximity to the Berkeley stand in terms of average rents? They skew higher, but that also lends itself to the fact that we are falling smack dab in the middle of the market in terms of affordable pricing for this particular complex. And speaking of where we sit, we fall really what I love to call the sweet spot of rental pricing. Post-renovation rents sit mid-range versus the comps, not only for the 2-bedroom units, but also for the 3-bedroom units. And as Tim mentioned, we are closely situated towards major employers And it's driven, this demand for this kind of housing is driven by close proximity to social life, restaurants, wonderful shopping, etc. So just a great area overall. So what is our business plan? We have mentioned that we have a CapEx budget of close to $4 million. And this is going to be an accelerated construction program converting student housing to market. It's delivered already with a finished exterior program, and our rapid construction program will enable us to provide a lease up that coincides with the availability of the units. So we are very confident that we can move ahead as quickly as possible and obtain the occupancy in a very short time frame. This property is nestled beautifully amongst live oak trees, as you can see in the bottom left picture. There's 136 B+ apartments sitting in this gorgeous setting amongst 6 4-level apartment buildings. And if you look to the pictures on the right, gives you a little glimpse as to the beauty and warmth of the interior as well as the exterior. The units are 2x2, as you read earlier, and 3x2s, and they provide nice square footage, $1,250 for the 2x2s and $1,425 for the 3x2s. And again, since we are basically almost gutting the apartments and reconstructing every single unit, it'll be brand spanking new with upscale island kitchens, solid surface countertops, a full gorgeous appliance package, as well as trendy track and pendant lighting, which obviously we know young professionals really look for those type of amenities when they're searching for new housing. Another snapshot of just to give you a sense for the warmth and flow of this complex. As you can see, the interior staging is just gorgeous. When you walk in, it really captures you as a warm place to live, and it has a high level of curb appeal. As you saw in the aerial overview, look at the beautiful pool setting as well. And the rec center is noted at the bottom 2 right slides. So these photos are beautiful. One thing that really struck out to me was the impeccable landscaping. This is done just gorgeously, and it really lends itself to the high curb appeal. You notice the pool complemented by just colorful seating in the exterior components. It definitely is an eye catcher. Now, Charles will go over cash flow and projections, and this will, he'll pick it up from here.
Thank you, Carla. So as you can see at the top, this is our cash flow and projections page. The top box is our 12-month period pro forma for 5 years. So year 1, we will be focused on finishing the renovation as well as leasing up the units. The renovation is scheduled to be completed within 3 months, and full lease up will be completed within 6 months. So you can see our NOI for year 1 is healthy for a lease up situation. You can see here in year 2, this is when we actually become fully stabilized. And so the NOI of 1.3.5 gives us a nice valuation. So going down a little bit lower to cash flow distributions. So in year 0, the capital event is the purchase, our equity going out. Year 1 from operations, we're going to be bringing in 1.15 to distribute back to the investors, and that's going to be our return of reserves plus any additional distributions from capital from operations. In year 2, the $623,000, that's going to be strictly from operations. So we've got about a 9% rate there. And then in year 3, when we refinance, we're going to be returning about 40% of the investors' capital. And so you can see right here, we're looking at about 41%. And then year 4 and 5 is when we start looking to sell in year 4 and sell in year 5 to have a profit of about $11.2 million. Now you can see at the very bottom, outlined in red, is a example of a projection of what a limited partner return would be on a $100,000 investment. And so you can see in year 0, the $100,000 goes in, and then year 1, you get about 16.5% back. Year 2, 8.9% of the capital the invested capital back. Year 3, 40, year 5, about 10. And then year 6 is, I'm sorry, year 5 is when we sell. And you can see it's about close to 140% of the invested capital coming to you in year 5. So the overall total return is going to be about $214,000, $215,000 based on a $100,000 investment. And so that's about a 2.15 multiple. Here we have our loan terms, sources, and uses. You can see at the top left, our loan amount is 17 million with a 4% interest rate. Now this is an interest-only loan, and so the term is 3 years, and we have 2 one-year extensions behind that. So our goal is to refinance at the end of year 2, and there will be no prepayment penalty because we'll be rolling into an agency product. So on the left-hand side, below that, you can see our sources, senior debt for 17 million, equity close to 7 million, with our total sources just under the 24 million mark. And on the right, the uses, our purchase price 18 million, CapEx right around 4 million, and then closing costs, which are around 2.1 million. That includes our reserves, both operating and interest. And so the total uses is just under 24 million. Our exit strategy is to refinance in year 3 with a 40% return of capital, and the exit is in year 5. For cost segregation, for a $100,000 investment, you'll see approximately $35,000 for 2021 bonus depreciation, with about $70,000 spread out over that 5-year period.
This is Alfredo Hooker, and I'm going to talk about the CapEx. What we have in this slide, it contains the list of the CapEx budget for all the interior renovations. So we have a total CapEx close to $4 million. And the renovations will bring this property to a Class B plus assets. The list of the items that we have on the budget includes replacing plumbing and the electrical, the units. We'll have brand new appliances, brand new flooring, complete full renovations of the kitchen and bathrooms. Essentially, the units will have the look and feel of a brand new construction. This slide shows some photos of the interiors of the work being done at the property. As you can see, the kitchen and bedrooms are being updated. The next set of pictures shows a representation of what the units will look post-renovation. We can see new flooring, new cabinets, new bathrooms, and the new electrical fixtures that the units will have. We showed the slides earlier, but I wanted to recap on the great projected returns of this offering. We have an IRR of 20.5%, cash on cash of 15%, and an equity multiple of 2.15. This is a 506C, so this is only open for accredited investors. So if you are one, you are invited to invest in this multifamily opportunity. The minimum investment is $100,000.
All right, guys, thank you very much. And as you know, guys, we are going to have a live Q&A on October 12th at 7 p.m. So please sign up. We'd love to hear your questions, your thoughts, and your comments. Our deadline for deposit is November 1st, but I must mention this is a first come, first serve. As we just opened up our portal, we currently have about $2 million in commitments as of right now. So do not wait until November 1st at it is, and I'm going to rephrase that, first come, first serve option. We are looking to close November 12th. So if you have any questions or comments prior, please reach out to the team and we'll get back to you at our earliest. Thank you.
Thank you. So here is our contact information. We have our team here that you can contact if you have any questions or any additional information you require, as well as there is the hyperlink for our investor portal. So go ahead and click on it and sign up for the offer. With this, we conclude our presentation.
All right, guys, thank you very much. And thank you to the entire team for putting this together. As you know, October 12th, we do have a live Q&A session. So we'd love to hear your comments, thoughts, and answer all of your questions. As you know, this is a first come, first served basis. So our deadline is November 1st, but note that we have committed amount of $2 million as of today. If you have any questions or comments, please let us know. Otherwise, our funding instructions are on Syndication Pro. We look forward to hearing from you. Have a great day, guys.